All right, let's get you updated on what's going on in the ag commodity trade with some thoughts from Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Brian, welcome to the show. And again, Happy New Year to you. The grain market's under a little pressure today. What's up with that?
Yeah, we are seeing good weather in South America. That's one thing a lot of producers are kind of forgetting about is South American production is going to be larger this year than what it was a year ago. We're probably 3-4 weeks away from seeing a record crop of soybeans in Brazil if we have normal weather during that time frame. And the market is starting to adjust for that and pulling back off of our highs. The fund short covering has ran its course, I think. The Commitment of Traders report that was out yesterday shows that there is long positions held by these large spec traders, the large fund traders. They're actually net long corn, soybeans, and wheat now. So that short covering, because of the Chinese trade agreement, has ran its course. Now we're starting to look ahead to the supply and demand report and the South American production. And unless we get some real bullish fundamental news from the production side of things in this report, we're going to struggle in here as South American supplies are going to come available over the next several weeks, and that will undercut our U.S. exports.
I wanted to ask you about the wheat trade. We have had what appeared to be maybe some unwinding of the spreads between the Chicago and the other two exchanges on the wheat market. Did you kind of read that into it yesterday with that market action there, or is there more at work right now?
Yeah, we definitely had unwinding of those spreads yesterday. It was, pretty large as far as volume goes, with Kansas City gaining against the Chicago. Today it's losing out against Chicago. And so, we're seeing a lot of choppy activity, but it's a lot of positioning ahead of the winter wheat seedings report. And the trade is kind of looking at this report and thinking with stocks low for the soft red wheat of Chicago, we actually may see an uptick in acres in that particular market, while we may see some lower winter wheat acres across the plain states. And, that could lead to some more spread activity where Kansas City starts to gain against Chicago a little bit ahead of the winter wheat seedings report out on Friday. That's one of the components of this report. There's a lot of moving pieces, not only U.S. production, but we'll also have an update on harvested acres, as well as ending stocks, winter wheat seedings, and South American production and world ending stocks.
Okay, so let's walk through these and we'll get everybody updated on these lower trades that we're seeing in the grain market today. On the corn market today, we have been hovering about a penny to fractionally weaker. We have the March contract now down a half at 384 1/4. And the new crop December contract is now at 398 3/4. That would be down a penny and a quarter on the day. It got as high as $4 1/4 cent, and then backed up from that. Looking at our soybean market, we currently have the March contract now trading 5 1/4 lower as they push the downward side of the envelope here. We're at 939 1/2, and that's off of our earlier high by 8 cents now from last night. Wow. On the wheat, as we mentioned, in Chicago, it's a downward session today. We have March down 2 1/2 at 547 1/2. In the Kansas City market, we have been trading lower by over a nickel. We're down 5 1/2 at 471 3/4. And the Minneapolis March similarly has been lower today. Currently, we have that March contract on the Minneapolis wheat trading about 3 1/2 to 4 cents lower as well. It's trading at 544 right now. We'll come back here in just a moment, and then we'll take a look at our livestock trade and get you updated on what's going on there to drive the cattle market, for one thing, right after this. Brian Hoops is our guest. He is from Springfield, Missouri, and he has a business called Midwest Market Solutions. He joins us from time to time to talk about the markets, and we're going to talk about livestock right now. And Brian, I'd like to compare notes with you about the cash cattle market out there in the plains. A lot of times you get some early information on that. We were just talking during the break here. I haven't seen anything shake loose yet in this first full trading week of 2020 as far as cash cattle market activity. However, last week, everything was still a couple of dollars higher yet again than the week before. And I was just seeing there may be some asking prices hovering around in the southern plains today, maybe around 127. That would be a bit of a stretch from what we had last week, although I heard some unconfirmed reports of maybe some sales up around that level. What do you hear on your end over there?
Yeah, Yeah, we're not really hearing any Packer inquiry at this point in the week. That will come, but it could take a little bit of time before we see, the Packers step into the market in here. I think because the Fed cattle online auction will be held on Wednesday this week. It's been dormant for 2 weeks because of Christmas and New Year's, but they'll start it again on Wednesday, and that will probably set the tone for where the Packer inquiry starts to come about. But show list asking prices about 127 and 203. That would be up several dollars from last week's trade. But, you've got to start somewhere. Cash trade was 2 to 5 higher a week ago, and the show list numbers are about 233,000 head, virtually unchanged from last week. So there's kind of a firm feeling, especially after the big rally in the futures market yesterday, that we're going to see at least steady, if not better, cash trade again this week.
Now, we've been talking about the fact that we had the wholesale beef trade that has really been kind of surging ahead here the last several days. Isn't that a little bit unusual after the holiday season for the wholesale market to really intensify like it has?
Well, what's going on is the Packers are cutting back on their Saturday kills. They have really ramped up those Saturday kills to make up for the loss of the Holcomb, Kansas plant being closed down most of the fall. And so a lot of plants were working big Saturday shifts to make up for that lost production. And because of that increased slaughter, that weighed on the cutout values. Now they're starting to, because of the new year and Holcomb being back up and running, they're starting to slow that down just a little bit. So we don't have the big Saturday kills. And as we're not pushing as many cattle or bigger cattle numbers through the pipeline, we should see a recovery in our cutout values. So I think these cutouts are going to stabilize here and start to work their way higher. We haven't seen the middays come out yet, but I would suspect that they're going to be firmer again today like they were yesterday.
Do you think any of the rally in the cattle market right now is actually still tied to the Australian drought and the liquidation of some of their cattle herd?
Well, I think that's certainly one of the supporting factors to the cattle market is because of the drought that they're having in Australia. They're not going to be an exporter of beef. That's going to translate into better export opportunities for the U.S. producers, and that's one of the reasons why I think there's some stronger upside potential here for the cattle market in 2020.
Amazing. Everything is tied globally. All right. Thank you, Brian, for talking with us.
Thank you.
Brian Hoops of Midwest Market Solutions in Springfield, Missouri, with the very latest on what's going on in the livestock trade today.
Okay, we'll see where the day takes us. We'll get those cutouts in about a half hour from now. All right, thank you, Marlon.